metals are up, S&P nears 7,000, oil slips, and much more. And we will go into all of those markets as and when we can. I should point out it is 11:10 Eastern time. So again, any prices that are mentioned in the markets are correct as of that time. Before we get into everything, just a couple of quick bits of housekeeping. First of all, happy belated New Year to every single one of you. Secondly, on contrariancapitalist.substack.com and also on the post that comes with this video, there is a link to a post that I put out yesterday, which is called Help Shape the Contrarian Capitalist. In short, it is a 5-question survey. It will take you 1 minute. I would really appreciate your feedback on this, purely because it will help to shape how the Contrarian Capitalist looks moving forwards. It is basically structured around what sort of content would you like to see, the current structure, do you like it, or would you like to see it changed? So again, I'll put a link in this post that comes with this video, but also head over to contrariancapitalist.substack.com. The title is Help Shape the Contrarian Capitalist. It will take 1 minute of your time, and it's a very quick 5-question survey, which will help shape what happens moving forward on the channel. So I'd like to thank you in advance for doing that. And I should also say, because I'm very bad at doing it at the start of videos, but if, of course, you are yet to become a free subscriber to the Contrarian Capitalist, and to please become a subscriber, and we'll go from there. Right. All of that being said, as mentioned, just gone 11:10 in Easter time. It is Wednesday, the 7th of January. So let's motor on. Let's have a look at where the markets stand at the time of doing this. We've got the S&P 500 at 6,952. So it's nearing 7,000. So it's had a strong week thus far. We've got the Nasdaq at 25,745. We've got the Dow Jones that has pierced 49,000. It's 49,270 at the time of recording. The VIX index, which measures the volatility of the S&P 500, that stands at 14.99. So it's right on the precipice of low volatility and normal expected volatility. It's slightly up on the week, but nothing major. The dollar index is up on the week, the Dixie up on the week, sitting at 98.65. Now, I appreciate there's been a lot of news about USA and Venezuela, and Trump talking about or mentioning that Venezuela will be turning over oil. I will get onto that in the commodity section. But in terms of generic markets, it's happy days if you're in the market. So we also saw a bit further afield, the FTSE 100 broke 10,000 as well. We've got the DAX over in Germany. That is continuing to go onwards and upwards. That is over 25,000 at the time of recording. And if I quickly bring up the Nikkei over in Japan, it's ever so slightly up on the week. It's not at all-time highs. The FTSE is, the DAX is, the S&P 500 is. The Nasdaq isn't, but the Dow Jones definitely is. The Nikkei sitting just over 52,000. So it seems like a buoyant start to the year. There's going to be many a reason for that. As you would know, being a contrarian capitalist, what we've done on the channel before is highlighted that because of the devaluation of currencies, so they're going to continue to go down. What that in turn means is that things priced in those currencies are likely to go in the opposite direction. So they're likely to go up. This is why I think that it's going to be a decent year for stocks in general. Doesn't mean it's going to go up in a straight line. I did point out actually in the market wrap last week that there could have been a potential double top forming, and I have preached caution for Q1. Maybe all these green candles are a good excuse to exercise more caution if you're of course looking at the stock markets. Just something to bear in mind moving forwards. Now, onto commodities, we see gold up on the week. It's currently at $4,446. Silver seems to have done a bit of a pump and dump at the start of the week. Of course, it went and hit around $82, maybe $83, depending on what markets you're looking at. Of course, we look at trading view here on the Contrarian Capitalist. It's sunk back down. It's currently at $77.24. Still an incredible number that not many people would have predicted at the start of last year. Not many people would have predicted at the start of 2026. We're going to be talking about it being a disappointment that silver's dropped down to $77, but here we are. And if we just quickly bring up those platinum charts, we've got platinum at 2,277. We have palladium up at 1,743. And looking at copper, again, this is copper per pound USD. Copper is at $5.88. It did actually hit and topped $6 per pound during the course of this week. $6.13 is what I can see at the moment on TradingView. So there's a lot going on. There's a lot of markets in motion. Let's look at quickly recap on the equities. So I believe, and if you believe, that your fiat currency, so dollars, pounds, euro, yen, whatever it might be, if you think that that's going to continue to decrease, then things priced in those fiat currencies are likely to increase. So that's therefore, if you believe that, then you're probably going to believe that the equities markets are going to have a decent year. Doesn't mean they're going to go up in a straight line, but again, taking the 30,000 foot view, if you think that might help to shape your investment decisions moving forward. That's what I certainly believe. But of course, I do think that maybe some caution might be needed in Q1 because there is potentially a double topping pattern in play. And Chris Steadley from Live School Commodity Corner highlighted this when we done our end of month and end of year macro on the 31st of December 2025. Looking at commodities, I should point out actually with commodities, if you are a paid subscriber, you will have access to the new traffic light system that's been put in place for the commodity wrap. Now, the reason for that is that rather than flood the commodity wrap with loads of charts and loads of writing, I thought that doing a traffic light system would just make it easier to read. So therefore, you can go through the commodity wrap, you can look at the short-term projections at the bottom, and you can also look at the long-term projections. Now, for those of you that are paid subscribers, hopefully this has made your life easier when it comes to commodities. But you would have noticed on the commodity wrap last week that I'm actually neutral on most commodities in the short term. So that is, for the next few weeks or for the next month. Now, that might sound contrarian, but of course, this is a contrarian capitalist. So what I mean by that is, and well, let me be more specific with the neutrality on it, is that we saw over Christmas the CME playing around with its margin requirements and so forth. Now, silver, and I'm sure other commodities, are likely to get more volatile moving forward. I know there are big price discrepancies between what we would see at the CME or COMEX or LBMA, so paper silver, dare I say. There are big discrepancies between those institutions and, of course, the SGE, the Shanghai Gold Exchange, of course, over in China. And if you look at the Silver Academy, I think they've done a post last week where the price of silver in Japan looked at about $130 an ounce. In Kuwait, of all places, it was about $100 an ounce. Now, of course, with silver sitting at around $77, give or take at the moment, that's a big price discrepancy. So there are a lot of things in play with regards to, the metals. I'm in the middle of doing a post that highlights all the supply and demand. Let me get that sorted again. I'm working on a post that is looking at the supply and demand dynamics with regards to a multitude of commodities. That should be out on Monday, the 12th of January. The point being that the demand for silver is increasing, but also there are significant supply issues. Now, these are not going to go away anytime soon. I know a lot of people get frustrated with the paper market and, why is it, so volatile and so forth. This is why I remain neutral in the short term, because what we saw when the CME made its announcements over Christmas is that silver was on the upwards and then it went down. We've seen at the start of this week, silver's gone up and it's gone down. it could happen again moving forward. So that's my neutrality on it in the short term, but of course, long term, I'm very bullish. But do go ahead and check out the commodity wrap and enjoy that traffic light system as well. A similar thing is in place also for the market wrap, which comes out on Sunday and looks at the equities. So again, the whole thing's been simplified, so it's easier to read. The information is more concise. It's in bullet point format. And again, there's a traffic light system there. Has something gone up or down throughout the course of the week, or has it remained unchanged? So again, I'm just hoping, and I promised that I would make these wraps and newsletters more succinct. So I'm hoping that's done the job. Oil is a different story, and we can go into oil as much as we want. I would recommend listening to the podcast that was done with Paul of the Sirius Report. We recorded that Monday morning, and there was a lot of issues that happened. A lot of things happened over the course of the weekend. Now, I'm not going to get into what's happened. Paul got into why that's happened, so I'm not going to regurgitate that information. But what I will say is that my sixpence on it is that I think what's happening here, right or wrong, is that the USA is looking to create a BRICS for the Americas. So obviously BRICS are doing a lot of work, Brazil, India, Russia, China, etc. They're doing a lot of work that is in effect competing against the USA and competing against, you could argue, the West and against the dollar. I think with the amount of natural resources that there are in the Americas in general. Now, when I say the Americas, I'm talking North America, talking Central America, I'm talking South America. There is a lot of oil, and people have highlighted this continuously on social media in the last few days. Venezuela has the highest amount of proven oil reserves in the world, even more than Saudi Arabia. If you look at silver reserves around the world, if you look at the top 10 countries, I think 5 or 6 of them are in the Americas. So this whole thing, in my opinion, is about resources. It's about energy. Energy is the economy. And being able to control those resources and create this block, obviously got the Monroe Doctrine from years ago and so forth. China and Russia are not going to start, fighting the USA in this part of the world. And when I say this part of the world, obviously remembering I'm based in Mexico City, these things aren't going to happen. Very unlikely they're going to happen. So I think this is all to do with the USA wanting to create a BRICS for the Americas. But that's just my sixpence. Moving on to oil, we've seen in the last day or so, President Trump has said that Venezuela will be turning over up to 50 million barrels of oil to the US. Of course, that could mean a number of things, but ultimately, and I'm reading from an article in front of me, these 50 million barrels of oil, which are at the time of recording worth about $2.8 billion, this oil is going to be sold at market price. Now, I'm just going to take a layman's term approach to this. If that is going to be the case and that happens, then it seems to me that President Trump is looking to suppress energy prices for as long as possible. Of course, there's midterms towards the end of 2026 in the USA. I think the Democrats are going to take back the Senate and the House. That's a contrarian thought. I put that in the predictions post for 2026. That's just what I think. But it seems clear to me that using this oil and this oil being turned over to the USA, that it's a way to continually suppress those oil prices. Now, I'm not from the United States of America. I know many people listening to this are. I'm sure, like most parts of the world, if you go and put what I would call petrol in your car or gas in your car, you're going to notice that price quite quickly. If it's $3 a gallon and it's gone up to $4 a gallon or maybe $5 a gallon, you're going to notice that quite quickly. Of course, if it's gone in the opposite direction, you're also going to notice that quite quickly. I haven't mentioned the oil price. Now, I didn't want to do that, but I will mention it now. And I'm looking at a chart of WTI. So again, throughout the week so far, it's reached a high of just under $59, but it's now currently trading at $56.51. Now, there's always going to be a lot of oil news out there, and markets are always going to react to that news. If we kind of look at the fundamentals of oil, it seems to me that there are issues with what is being supplied. So, the numbers that are being reported. It also seems to me that there's an issue with demand. So demand seems to be a lot higher than people are saying that it is. Oil's not going to die anytime soon. It's not going to go away anytime soon. I know that if you listen to Dr. Chris Martinson over at Peak Prosperity, he will tell you that there's the tier one land it's in the Permian and other parts of the USA that's decreasing. So that tier one land is starting to be dried up. That then means you've got to go for tier two land and tier three land. That means that oil extraction becomes more difficult, which means it's a more costly process. And therefore, if oil is trading, and again, this is WTI at 56.51, is that sustainable? Well, maybe for the really big companies, I'm just going to say Exxon. I might not be 100% with that, so please don't hold me to account. But I know if you're one of the really, really big companies, you might be able to sustain that because of the amount of resources that you have and diversification. However, the point being, on a basic supply and demand aspect, that if supply is tighter than it's being made out, even with these 50 million barrels of oil coming onto the market, even take that into account, supply is still quite tight. And of course, then if demand is increasing further than people think it is, that's a recipe for higher prices. It's quite straightforward. We're seeing that I appreciate in the metals there are other reasons why the prices are continuing to increase, but certainly in silver's case, there's a structural supply deficit. I know there's a lot of shenanigans going on behind the scene. Keeping it simple with silver, there are structural supply issues. Demand has started to increase. And again, economics 101, that's going to lead to higher prices. That's why I'm long-term bullish on silver, for example. So it'd be interesting to see what happens with oil. I've called for patience in Q1, maybe Q2 as well. I am still bearish in the short term on oil. I do think that the supply and demand, that's definitely not going to go away anytime soon. And as we've seen in commodities, super cycles and bull runs and so forth, gold normally leads the way. Silver will play catch up, and then everything else will catch up after that. Oil is normally the very last thing to catch up. All of these things we have to take into consideration. But also one other thing we need to take into consideration is the Fed cutting rate, or the cutting rate of whatever bank you have, whether it's the Bank of England or the ECB. Now, I'm delighted to announce that Chris Rutherglen is going to be on the podcast towards the end of January. He is an expert at looking at gold and looking at rate cutting cycles. So I know that for the first half of 2026, it's fair to say that his outlook is relatively bullish. I think he's put down gold at 5,200, if I'm not mistaken, silver at around $100. But for the latter part of 2026, and this combines with a potential rate cutting cycle, he believes that silver could drop down to around $50, and also that gold is going to drop down potentially, I think it was about $3,700. Now, that's something to bear in mind. I know that I've been personally quite bullish on my predictions this year. Again, this is a contrarian capitalist, so I can't be milk toast with these predictions. I have to stick the neck out. I think it's going to go parabolic, but again, I could be completely wrong. So it'd be interesting to get Chris's point of view, and I'm sure he'll have a lot of charts to go through as well. So watch out, of course, towards the end of January for that. The point being that we should always look at challenging what we think is going to happen. Okay, and we've got to take different pieces of the puzzle, we've got to put them together, and we've got to form our own decisions at the end of the day. I know that a lot of people continue to ask me and they say, Rob, is this a good time to buy a physical? Is this a good time to trade? From a physical buying point of view, and again, this isn't a financial recommendation, I would say that dollar cost averaging in is the best way forward. So if you buy some silver at say $77, and then in 6 months' time it's at $50, yeah, okay, that is a bit of a loss. I understand that. But if you then think that silver is going to go to triple digits, or it's going to go 300, 500, wherever it might go, as part of a massive, commodity bull cycle, and you've bought in at 77, then you're going to be sitting pretty in a few years. This is why you always need to do your own homework, and don't take anything I say as financial advice. But dollar cost averaging in, whether it's gold, whether it's silver, whether it's platinum, if you can get your hands on it, then that is a very good thing, I think, to do moving forwards. In terms of trying to trade the markets, it's a different beast. It's a different mentality. You'll be kept up at night if you don't use suitable physical management. So therefore, if you're going to go in and try and trade these markets, all I can say is good luck to you. I'm sure there's a lot of fantastic people out there that can help you with that, but I would not be looking to do that myself at the moment. Volatility is going to increase, and again, if something like the CME comes out and starts to change its margins, or something happens in Shanghai overnight, or yeah, I don't know, a black swan event happens, and you're trying to trade that, and you're caught on the wrong side of that, again, that could lead to all sorts of chaos moving forward. But certainly from a physical bullion point of view, I would suggest, again, dollar cost averaging in and keeping a spreadsheet of it. Don't just buy and then try and go through all your invoices at a later date. Start a spreadsheet. If you're yet to even make a physical bullion purchase, do a spreadsheet, and then that way you'll be able to see what your dollar cost averaging in is, or pound cost averaging, whatever currency, of course, you're using to buy your precious metals. So we've got a lot of markets in motion. It seems to me I'm personally neutral in the short term on the metals. I think there is some room for shenanigans that could be out of our control. That's why I remain neutral. And hey, if silver pops to $100 in the next week or two, then so be it. I come back and I hold my hands up and say, I got that one wrong. I can only give a contrarian perspective of what I think is going on. So short term, I'm neutral. Long term, very bullish. Gold, silver, platinum, palladium. The only thing I'm not bullish on in the very long term is actually copper. Copper, I'm neutral on in the very long term. I know there's supply and demand issues there, but the thing that concerns me with copper especially is that Chinese demand seems to be waning, and the Chinese are, the last time I checked in, the biggest consumer of copper. So that's what concerns me moving forward. I'm also bullish in the long term on things like natural gas, not necessarily the price, but certainly what it's used for. I'm certainly in the very long run bullish on oil. In fact, I did say at some point in 2026, I would look to go long on the futures in Brent and take up a trading position. I'm still waiting at the moment because I think there's more downside to come. And we can see that even from the chart this week, oil has been a bit volatile, a bit more than it normally, well, certainly more than it has been in the last couple of weeks. So it's something to keep an eye on moving forwards. Also, things like nickel, lithium, tungsten. Again, I'm going to try and cover these in the article that comes out on the 12th of January. There's a lot going on. If we have a look, again, going quickly back to the equities, I'll put it in layman's terms. If you think your currency is going to get devalued or debased, then things in those currencies are going to go up. This is why gold marches to the upside. It's not necessarily gold going up, it's actually the value of the currency going down. That's why the gold chart looks very similar, whether you're looking at in pounds, euros, or indeed US dollars. So I think it's the same thing with the equities markets here. Also to watch out for in Europe, so the FTSE and the DAX, is that if investors or hedge funds start to get a bit concerned with the state of the US market, then they might look to markets that are slightly more undervalued than the US markets. So therefore, you could see more capital flows go into the FTSE 100, into the DAX, maybe into the Nikkei, maybe into the Hang Seng, even the Shanghai Composite over in China. So you could see those flows happening as well. That's also something to bear in mind. For me, I'm exercising caution in Q1, maybe Q2 for the equities. But again, if I'm proven wrong, then I'm proven wrong. It is what it is. Looking at oil and looking at Venezuela, that situation is going to change daily. Again, my sixpence on that is that I think that the United States of America are going to look to try to create a BRICS for the Americas. I'd highly recommend you go and check out the podcast with Sirius Report. That podcast is available to everyone. It is also available on YouTube if you want to head over to YouTube to the Contrarian Capitalist as well. If you do go ahead and head over to YouTube, please do give a like and subscribe to the YouTube channel. That would be fantastic. And as I appreciate a lot of listeners are from the USA, I will also link to an article that my friend Chris Irons over at Quaff the Raven has done. He actually released it today, this morning, and it's about Mamdani and New York and the title, that, as he has put it, is Mamdani's Clown Show offers its opening act. He's talking about World Cup tickets and the prices, and I think Mamdani has waged war on FIFA with regards to that. Quite rightly so, but again, it seems to be a bit of political positioning here. I believe the subway fares in New York have gone up. I believe that was pre-agreed before he came to power, though. But still, it's not a good look. Anyway, he's done a very good article on it. I'll link to it. I believe there's no paywall on it either, so it is free to read. But I highly recommend you giving that a read as well. In terms of other articles that are at the bottom of this post, let me just bring up the post. Just of interest, one thing, there's a link to a post on X, and it shows copper, gold, and silver all going up at the same time. And according to the chap that wrote the post and provided the information, there's only 3 times before that has happened, and they've preceded massive crashes. So that's something to be warned about moving forwards. In terms of uranium, should mention that Urano or Orano, ORANO USA, and Centrus Energy Corp, they've both got strong ties to Oak Ridge over in the USA, and they've netted 1.8 billion from the US government in terms of being able to push those projects through. I know that the US government effectively handed out 2.7 billion in grants, I believe, in various uranium projects or nuclear projects within the USA. So again, I've linked to that article. That's worth reading. So very good. So if you've got uranium stocks, you would have seen them likely increase quite highly this week. I put a link to the oil article with regards to those 50 million barrels. Looking at the other two, we've got things heating up in the Atlantic. US supposedly seizing a Russian flagged tanker in the North Atlantic. So I've linked to that article as well. I have also linked to this is a more sobering article. I'll get onto that in a second. I should also mention, quickly going back to Venezuela and quickly going back to Polymarket, of course, who do sponsor these midweek macro videos. The Polymarket market you'll see above is the Venezuelan leader at the end of 2026. That stands at the moment a 50% chance of Delcy Rodriguez. What Paul described from the Sirius report, what he described was that part of the USA's playbook potentially is taking lessons from Iraq, and rather than going in there and trying to change the whole thing. Obviously, Maduro has been removed, apparently still acting president. And Delcy Rodriguez, who is the second in command in effect, has stayed in power. Now, I think that's why this Polymarket market of the week is in this post. It's a 50% chance. I think it's more than likely that she'll be there by the end of the year. I don't see Maduro going back, and I do think that from a political consistency point of view, the USA, rightly or wrongly, will want to have her in charge. I think they'll do whatever they can to keep Delcy Rodriguez in charge towards the end of the year. Again, with the USA, with Venezuela, we don't have to agree on everything. We don't have to disagree on everything. Everyone is entitled to their own opinions. I'm not saying that what's happened is necessarily a good thing. But again, I can only attack it from an oil point of view and try and look at the bigger picture moving forward. This is why I think it's all part of BRICS for the Americas. I appreciate the optics do not look very good at all. But again, we don't have to agree or disagree on, anything or everything with regards to that subject matter. I'll leave with a more sobering note. And over a New Year, you probably have seen the incident over, I think it was in Switzerland. More than 40 people died after an explosion in a bar. And the reason I mention this is that what concerns me with the 21st century is that there have been multiple videos of people filming that were inside the venue, filming the fire. Which was apparently created possibly by sparklers. I don't know every single detail on it, but it seemed to be started by sparklers within the venue, and then that led to a fire, which then led to an explosion, which again, unfortunately, has killed more than 40 people. What I would say on all of that is, of course, I'm sorry for anyone's loss in that. What concerns me is the amount of people that were just recording the fire and not doing anything at all. There seems to be no survival skills there at all. If I was in the building and the roof had gone on fire, I'd be running like anything to get the hell out of there. And it just amazed me the amount of people recording it. In fact, we had an earthquake here in Mexico last week. The alarm went off on my phone, and I got royally told off by my wife being very slow with regards to dealing with an earthquake. So luckily, we haven't been affected. But the point being is that we have to learn from these experiences. So if you, by any chance, and I hope this is not the case, but if you are ever in a serious situation where you can see something going down, please don't be one of these people that just takes out your phone and starts recording it. Get your survival instincts intact. And I mentioned the survival instincts because it's, again, the videos I think are very damning. That people are doing that is very 21st century, but also from a survival point of view. This then reflects back on commodities and markets, that we have to be responsible for our own actions. We have to be responsible for what we read, the content that we indulge. We also have to take matters into our own hands. We are all put down on a path. Every decision we make put us down onto a path. Some of those paths are going to end up being better than others. That is life. That is what it is. If you ever find yourself in a serious situation where there's a fire or earthquake or whatever, take responsibility. Please don't start recording it. It's not good, because as we've seen here in Switzerland, many people have lost their lives as a result of inaction. I know that also the authorities have come out and said, well, the building wasn't checked for 5 years. Fine. I understand that, some people higher up in the food chain there are going to be held responsible. But ultimately, if you're in a serious situation, use your head, use your noggin, as we say, get your survival instincts intact. Same again with everything that's going on in commodities. Get your survival instincts intact. What's coming down the road? Why is it coming down the road? What's likely to happen moving forwards? And then what can you do to sort that out? And again, this is where the purpose of this channel, to be fair, is commodities, plan B, get it set up. Hopefully you will never need them. But if it comes to a point where you do need them, you're going to be grateful that you've got them. So a bit more of a sobering note, I should say, to end on. As always, please do subscribe to the Contrarian Capitalist. Do become a free subscriber, contrariancapitalist.substack.com. You can also become a paid subscriber. There's a monthly option, annual option, and there's a founding member option, which is a one-off lifetime investment. There'll be a post out next week with other products and services that I've been working on that will be made available to every Contrarian Capitalist as well. So it's more of a concierge service moving forward. So watch out for that post. That will come out next week. And of course, we are back. It is 2026. We're back with a bunch of excellent podcasts lined up in the next week or so. So thank you for bearing with me over December. And most importantly of all is please do go and do that 5-question survey. I'll link to it in this post. If not, head over to contrariancapitalist.substack.com. It's called Help Shape the Contrarian Capitalist. It's 5 simple questions, and that's going to help shape what this channel looks like in terms of what's paid content and what's free content moving forward. So thank you in advance for doing that. Have a fantastic day. We'll be back with hopefully Don Duret's actually going to be on the podcast on Thursday, the 8th of January. So tomorrow I'll be back with that new traffic light system in the commodity wrap on Friday. Have a fantastic week and see you soon.